Mm.
Hi, Warriors. How is everyone today? We're at a big place in market history, and I knew the right guy to have today would be Patrick Kareem, who really takes excellent macro views with his partner at North Star Bad Charts, at North Star, and at Bad Charts One. Patrick, great to have you here today, buddy. Some wild action since SVB metals have shown people that they're not archaic relics, and we've had a huge move. Welcome to TradeGate Hub, my friend.
Hi, Dale. Thanks for having me. Yeah, the metals, man, it's they'll never be archaic. It's no matter what people say, it's like the spin. If you want to make yourself popular, there's either you promote yourself or you could try to dig the other guy, right? To try to bring yourself up. But financial markets, all the aggregate of market participants, gold, silver, or even let's say gold, it's like much less used in the industrials and silver. It still reflects the destruction of purchasing power since forever. Even today in 2023, when it's supposed to be a relic, it's still pricing in the monetary imbalances required to keep nominally afloat all the other asset classes. It's still doing its job. So I don't get these until that changes, until let's say gold does not track inversely your purchasing power. Nothing's changed. So all that marketing stuff, guys, you got to forget it. All the everybody dissing silver, just look at the charts, look at the gold chart, and if it's breaking out and giving you an edge as a trader to make some capital gains, then use that. But don't trade those narratives, guys. Trade the chart.
Yeah, price is king. And I remember, Patrick, where they used to say you could always buy a good suit for an ounce of gold.
Yes.
So
Yes.
I haven't been out pricing suits since, my commute. I have more bathrobes now than suits. Okay.
Well,
and, commuting from one room to another and
I know.
putting my artificial background behind me and makes it look like I have a beautiful office. But anyway, you know what I'd like to start with? You are so absorbed in your technical work. I'm curious because it's been a long time since I've asked you, how did you get started in this business? What was Patrick Kareem doing prior? And then what was the catalyst to bring you into your interests and making a career out of the financial markets?
Well, I started my background back in the days. I was in university studying psychology. And then about halfway through, my best friend at the time, he broke my arm wrestling. And then for 6 weeks, I wasn't going to school anymore. But then I realized that I didn't really want to do psychology. I liked it, but I didn't feel it was a career choice. And then I was walking in downtown Montreal, was walking in front of this institute teaching technology. I think it was back in 97, microcomputers and networking. And then I said, what? Somebody could pay me to actually work in computers? Because I was always at home on my 486 or my Pentium. I was fiddling around. So I had a great IT career as a Linux AIX system engineer since 98 all the way to 2021. But halfway there, so during that, I loved IT. But about in 2006, I started accumulating funds and I started investing. But I was doing all, in hindsight, I was doing all the rookie mistakes that somebody does now. So they Google stocks to buy. They fall on Bitcoin. They fall on penny stocks forums, people promising the moon. They have no idea of the technical analysis, right? They could be buying in the melt up top, stretched away from moving averages. I didn't even know that. I bought some stuff, no risk and money management, put everything I had. But at night I couldn't sleep well. And then I sold. But in hindsight, I look at those charts and they were penny stock scams. They all crushed down.
Yeah.
So then I fell into the book, Stan Weinstein's Stage Analysis. And then he said, forget the stories, forget all that. Just look at the price action. He was explaining that casino stocks let's say in the early 80s, nobody wanted them. The narratives were horrible for casino stocks, but he saw in the charts that they were actually basing and breaking out. And that kind of crystallized to me. I said, finally, there's a way to do this unbiased and not get trapped in the daily headline news. So from about 2006-07, then knowing technical analysis, I shorted the 2008 crash. I had fun doing that. And just over the years, I've been observing technical patterns, stuff that repeats, learning, testing, and just that cycle over and over and over. And like after, I don't know how many hours I put it as 10,000 hours or whatever, you kind of you're starting to understand a little bit more what's happening. Even today, like recently, like every day I learn something new, right? And that's why we talk, and hopefully while we talk, you might ask me a question that's going to get my curiosity going, and I'll have to do some tests, look at some charts, see how that works out. But that's when I knew it was definitely something I wanted to do all the time. So I put away my IT career. That's done. And now I'm 100% doing just charts. Like I dream about charts. I have a chart idea during the night. I said, oh, I wonder if the US dollar reacts to this. And then in the morning, the first thing I do is I pop up my computer and I put up the chart, try different time frames, and see if I could get some additional evidence there to
Yeah, you
to
sound
give
like
an edge
someone
to
I
all the other
know.
traders out there.
I find myself in the backyard where I'm out there to relax, and I'm thinking about trading scenarios and market scenarios. And I don't know about you, but I need to turn it off. It's hard to turn it off. How do you turn it off?
Well, yeah, when I step away
You
from the
don't
screen,
have to. You don't have. You're so young. You could just obsess over it 24/7, right?
yeah, it's the kids. So let's say I start having fun with something else, then of course all that mind space of trading, it shrinks, and then I'm having fun in the moment, let's say with my girlfriend and the kids and stuff like that. But as
Okay.
soon as, let's say, they go to school and my brain, that space opens up, the first thing I go into, it's not about finding out if the Habs or if the Canadian team or sports they won. Like my focus right away, it says, okay, I want to look at some charts. I want to see where I could get an edge. And yeah, that thing, it encompasses my whole existence there. Once the family shrinks, like, when
Yeah.
after I had fun with the family, I go straight to charts.
Okay. So you have probably the most important chart in about 20 years or so. Probably even longer, maybe back to the
Yes.
70s, right? So you're showing that triangle breakout on this chart here. And we looks like we even had a retest. So why don't you tell our
Yes.
viewers what the implications are? Because actually, Carter Worth, I don't know if it was gold versus Dow, but it showed a big saucer bottom that
Yes.
gold's that it's starting to come out. I mean, been developing for, I don't know, 2-3 years. And you've been talking about this moment. I've known you that long or longer. And it's got to be something when you've been waiting for something for a long time, and now you're getting the bell has rung. So why don't you tell people what this means? You know, even if gold pulls back. And here's my one question about the gold here. And I think that this is real, what's happening here. So do you think we could enter situations like this, Patrick, that say we get a swoosh in the stock market, for some reason we take out the October low, where the S&Ps will make a new low, and then the worst case for gold is maybe 1820, and it's putting in higher lows so that the market will start putting in lower lows while things that have turned good will only correct.
That's right. Exactly. And that's what happens in each of these paradigm shift type of events. So here I overlaid, guys, just in the back. So I'll answer your questions, but working from the latest one. Here's the SPX in 2001, rolling over below the 1 year, and then after that faltering below the 3-year moving average right around here.
Yeah.
And then it kept going down, down, down. Then after that, it had a bear market rally. Once it tagged its previous highs, it fell down again. So right here, we're right pretty much where we're here, right here at the cross. It's turning, it wants to go back up. We're not quite sure normally where it goes. But what you got to look at is gold. So here's gold. I'll put a logarithmic when, and I'll put a vertical. Here
You know
was
what
the
else?
exact
You know
bottom.
what else? was interesting. I saw on that show that it took annualized returns of both S&P and gold from, I think 97, and they both annualized out the same at 6% over that period, over that 25-year period. Do you find that unusual, how closely they've tracked each other, even though at times they've converged and diverged, that overall you got the same return from the S&P you did from
Yes.
gold in all
Well,
that time?
since when? Since 2001,
I
about?
think 1997.
Yes. Well, look here. Well, look at the ratio. It's back at those levels. So if you look at 1997, here's the gold to Dow Jones ratio, or I could put the gold to SPX. It's practically, there's not much. I'll put the gold to SPX ratio here, and it's the same level. So the ratio, while here SPX was outperforming gold as the ratio was going down, but then after that it had gold had a rally versus SPX all the way to 2011, and after that it went back down here. Well, we're right back at the levels, and I'll zoom out here. I'll show you guys. We're right back at the levels of 1972, right back at the levels of 1997, and back at the levels of 2007. So this is a critical pivot line right here.
Did you do, just out of curiosity, did you do fib retracement from the low of 2000 to the high of 2011, and how much we've given back? To me, I wouldn't be surprised if that's 61.8 back based upon the 2000 low and the 20. See, we get together and we think about these things.
Yes.
So
where on the peak here, peak?
Yeah, the peak. The peak in 2011.
So we retraced actually more than 78%.
Okay. That's okay. And now we're trying to get back above the 78%. So there's only one other fib. It's like 88.2 is the last one. But it is carving out a higher low. And why?
Yes.
And I would look for a bigger wave than we had from 2000 to 2011, because it's either, these are money waves. Okay. The first wave, if you catch, is nice, but if you get a pullback and we put in a higher low, you could get at least equality with that move from 20 to 2011, but you could also get 1.618, which would be huge of that rally from 20 to 2011.
The extension, right?
Yeah, from the lows that we just put in this year.
Fib extension, fib retracement.
Just curious where that comes in. It might end up being all-time highs.
Not sure about the tool.
Okay. All right.
But it will look. This is what's happening because we're doing a higher low. Where's my?
Sure doesn't
if
look
ever
like
we get above this line, there's
Yeah.
a bigger pattern. We're probably going to have a reaction here. If this line is meaningful, there's going to be a third reaction. Here's could probably be a pullback, and to morph that line into existence, right? Because we're going to have one touch, two touch. For a line to be valid, you need three touches. If ever we have a bouncer, maybe in 2024, that's probably where gold is going to taper out. I don't know, at 2400, 2600. This is the end game, crazy move. It's the move back to 1980 highs in favor of gold.
Okay.
But we're not, this is, for me, this is the massive move we have. So whatever's happening now is just going to be a prelude to the eventual end game move. And right here, you'll see there's a good reason we're gonna probably halt here. This is a wall. So previous support turn resistance, can't get back above, goes back above, retest from above, support, breaks here, support, breaks below, tries to get back up, resistance. Here was the melt up top in favor of gold versus SPX, breaks above, support, resistance becomes support. Once it breaks below, becomes resistance. And look, that's probably, we're going to approach this confluence of resistance right there, this wall and this descending trend line. And if ever we close above both those lines, something special is going to happen.
Well, it's a big move from here just to the line.
Oh my, look, Dale, this rally here, from here to here, gold went up from 1100 all the way to 2000 in this bear market rally. So as gold bear
the
market
market
rally.
went with it. Because the market went with it,
Yeah, exactly.
right?
And
That's why it
yes,
didn't stand out as much.
and
Okay.
that's why people got to be careful, because nominally they could print so much money that even the SPX stays afloat, right? Maybe we're not, maybe the SPX will, people are looking for huge down moves like that. Maybe SPX will never go maybe 80% down nominally, because now the spigots, maybe they're able to really pump it in faster. But what you got to look at now is not nominally, because the US equities could go up here, they could muddle sideways. But if they are underperforming gold, and that gold to SPX ratio rockets up, man, why are you fooling around with this nonsense going sideways for 10
But
years?
it is a tailwind. Whereas
It's a,
if we got a good swoosh right here in the market, it would be a little headwind for gold, and everything will come off because you sell what you have to. If we had a big decline in the stock market,
that could have already happened, Dale. I have a case where this down here, this is the gold chart going down here with the SPX as it's going down.
right,
This move down from the peak here, I'll do
right,
a percentage. Well, okay, that's for the SPX. SPX, as it went down 20%, gold went down. Look here, gold bottomed in 201, and SPX was barely below the 3-year moving average, pretty much where it is now. It's possible if gold breaks out nominally on its chart, and people are always waiting for SPX to go down and drag down gold. There's a probability that is already past us. Even in 2000, look at here.
Yeah, you mean like
look
in
where gold bottomed.
October of
Yeah.
last year, we had the gold bottom last October. Did we have a low with the market in October
Yes, right
last
here.
year?
So it's possible that gold has already put its bottom. So
Yeah, okay.
US
Well,
equity
I think it has. We're not going to, I don't think we're going beneath 1800.
gonna be tough. Look, there's a look, we had the retest, breakout,
Yeah,
and now it's
yeah.
above. On the weekly, it's confirmed. On the monthly, at the end of the month, it'll be confirmed. On the quarterly, gold is there's some crazy stuff happening there. So if ever we get a quarterly close above, remove indicators.
Yeah.
It's looking pretty, and this is aggressive. If we get a breakout above an inclining line here, that is massively.
Yeah.
Look, I don't know. You can make it. Somebody can make a case that here wasn't convincing. You can make a case that it did break out last quarter. We weren't 100% sure about it, but if somebody's, and I think, but the futures, they don't look as good as the spot. I'll do the futures. Yeah, the futures. Oh man, it's like. I wanted that breakout to be super convincing. And here's another pattern in play. It's a megaphone, 2 touches at the bottom and 3 touches on top.
Have you seen what's happened to stocks like Caterpillar? Take a look at CAT. Take a look at Deere, CAT, CAT.
Yeah,
I mean,
looks obvious a little bit there.
Yeah, Deere, same thing, DE. Now, these are, I kind of associate China with it. And Apple is against a major trend line up here. And if that caves, since that's such a big part of what's going on here, we're looking at monthly charts here. Yeah. So, I mean, monthly.
Here's Deere.
Yeah.
Let me see. So yeah, it's whoa. It's starting to lose
down.
some. Yeah, it's 1, 2, 3. Yeah, this is starting to lose those inclined support lines. So that means just the momentum slowing down. And eventually, if ever it starts closing below the 3-year moving average, then yeah, it's at risk of going sideways for a little while.
Yeah. And even the strength, the semiconductors, SMH, that is beginning to diverge. A monthly will probably look great, but let's see. And it's just a retracement.
Right now, it's just a retracement of
Yeah.
Yeah, it's just a retracement until, and this is where people get, they get all confused and, oh, it's a rally, it's go time. Look, this thing, what it could do, it has to discover the next resistance, whatever it is, it's gonna do reaction. So that's gonna start morphing into existence the next breakout line. And once we have 3 touches, then if there's a breakout, you trust it, right? Look at this, guys. Even here on these crazy rallies, it didn't go to the moon right away. Everybody thinks when the rally starts, that's it. It's a straight line.
No,
It's going to react.
that's why the toughest part of trading. And here, I'll say it again. I got out of I bought the miners perfectly. Okay. When the GDX was 2680. Okay. And I covered them at right around 30. Because I saw some divergences. I thought we'd have a pullback anyway. That's why the toughest part of the business, maybe it's just for me, is having the patience for a great hold. I mean, do you have a hard time when things are working for you to not ring the register? Or so I came in that Monday, and that was the SVB, happened after the close. I was asking my friends, does anyone know a way for me to reinstate my positions from Friday?
well,
Anyway, you ever do that?
well, we have, we use the targets, we preset them. So
Yeah.
once the target is reached, so let's say we had
so you have the patience to hold for targets.
Yes. So
And
let's
you
say we
don't
would have,
get out mid-course. All right. So the target is your discipline. You're either your stop or your target, nothing in between.
there's, yeah. So it's all, we try to make it as mechanical as possible, because you're right. It's human nature is always going to try to sabotage, because you're looking
Yeah.
at daily price action. But
Yeah.
let's say you're playing a 2-3 year breakout base. But then
Yeah.
after that, what doesn't make sense, people after that, they look daily at the price action and they let that influence how they
Yeah.
feel, how the trade's going. Look, we had some trades that we bought out of huge bases with much higher targets. And then yesterday, a couple of them, they corrected 10%. But then you look at it, it's still above the 12-month moving average. It's still above an inclining trend line. So you got to match the frequency at which you look at your chart based on the framework that you use to enter. So if you went in based on a monthly
That's
close,
a pearl.
it's nonsense looking at a daily chart. You're just going to drain your emotional capital, start sabotaging your own trades, not letting your winners ride to their implied measure moves because you got scared because there's a bearish news. Oh, let's say you're on crypto, then the Congress is going to ban cryptos, and then you sell. But it makes no sense.
Let me ask you this.
Parameters, respect the TA, the classical chart patterns, and that should guide you. Because those winners, if you cut them short, often a trader is going to have 2/3 are going to be losers in all his trades, right? But the 1/3 that win, they have to be worth it, and they have to really give you much more return than those losses, right? So let's say you wager a percent per trade, but the winners bring you in reward, let's say 3 times as much. Even if 2 of those are losers, you lose 2%. That one winner that brought you in 3%, it makes you a net of +1.
Yeah, the GDX trade was 20% in about 2 months, from 26 to where it is now, almost 30%. What do you think about that huge move that we had in the gold silver ratio, that big drop that we've had over the past couple of weeks? Is that getting overdone?
Let's see where the next resistance is. Oh, it looks like it wants to come and try to test this breakdown line.
Yeah, they'll take it into the 40s.
Wow, yeah, that's a big move. And look, if you look at that chart,
yeah,
this pattern, we've seen it over and over, because this is the equivalent of practically the gold. I'll put SPX to gold, SPX, XAU USD. Once you start looking at these patterns, what did I do? Oh, I didn't divide it. Let me do it again. SPX divided by XAU USD. Here it is. And look at that.
Yeah.
I'll overlay the SPX to gold, and it's pretty much so if you think my first chart I showed you, if you think the gold is going to break out versus SPX or SPX breakdown versus gold, then it's fair to assume that silver will absorb, will get the message that, hey, it's gold's opening the gateways and silver will start outperforming gold. So it's win-win-win. Silver's outperforming gold by the gold silver ratio breaking down, and gold is outperforming SPX by the SPX ratio, SPX versus gold breaking down. This is massive. This is a bull market in precious metals when you see that those key elements align, right?
Buy breaks, buddy.
Yes.
Consider any sell-offs gifts.
Exactly.
So that's what I'll be looking to do. What's the best way for people to follow you and work with you? And you have a great YouTube channel. You and Kevin do some great macro work. You guys are like astronomers in the financial markets. So, you know, you're looking at black holes that, you know, going back to it showed me charts going back to 1900. So you're a technical historian, Patrick.
Yeah, it's look, this is the biggest TA. Sometimes it gets a bad rap because you have people who have theses and then they look at they discover a price chart and they pick and choose their price date start to make it fit, and that's biased. You know, that's people trying to fit the price, to fit their thesis, fit the price to their thesis, but it doesn't work that way. It starts with the 100-year chart, identifying those big cycles, and then even if you're a day trader, at least understand where you are in that macro landscape. And then you could day trade and have fun and know if you have the tailwinds or headwinds. So folks, yeah, they could find me, like you said, on Bad Charts One on Twitter. All that stuff's free. I have the website, northstarbadcharts.com. And yeah, the YouTube channel, guys, North Star Bad Charts, the YouTube channel there, where we put out our thoughts, we have interviews. We had you on, right, Del? And we're going to have to book another session to have you on soon. And yeah, hopefully people find value in the technical analysis done properly. It's a huge edge everybody should look at, and it'll make you sleep at night properly. You won't be influenced by CNBC. You won't be influenced by daily headline news. You're going to know if the probabilities are in your favor. And that's the best we could ask for.
How to Trade with Conviction by Patrick Kareem. There's your book title, buddy.
Man, I need to write one. I'd love to write one.
Write that title down. How to Trade with Conviction by Patrick Kareem.
There you
and
go.
I'll just be your Colonel Parker and you'll be Elvis, okay?
What? I don't like that.
We'll have to get, I don't know what Kevin could be. He could be your dad or something. Anyway, I'm talking about the Elvis movie. So, Patrick, you know, always enjoy batting the market ball around with you. Thank you,
yes.
my trading warrior brother, Patrick Kareem at Bad Charts One. Check him out. Get the aerial view. Okay, don't get micro. Take a look at what the planet looks like from outer space with Kevin.
That's right. All right,
All
thanks.
right. You're like an astronaut in the FinTwit industry. Thank you, buddy. It was fun
Thank
too,
you.
right? You know, fun.
Yeah.
Fun.
Always fun.
And replay this, guys, and look at those ratios, and the worm has turned. Adios, buddy. Thank you, Patrick.
Bye. Bye, Del.
I'll see you soon.